Okay, let's start. Hello, everybody. Frank is here from Quantilia. I'm very happy to arrange this webinar today. As you know, Quantilia creates bespoke portfolio management platforms with more than $80 billion under analysis every day. I'd be very happy to connect with you later on if you have any need in the space of data management services, portfolio analytics, or reporting. But first, I pass it to Jacques Lemoisson, which you know already, I'm sure, the founder of Gate Advisory, who will share with us his global macro and Chinese thematic media pit stop. Jacques?
Thanks, Flo. Hello, everyone. I'm very happy to be with you today. And just feel free to post any comments or any questions. Okay. Interactivity is a key word for me. And definitely, we need to share. And we here to be agree, to not be agree. And I will be more than happy to answer to some questions. Anyway, let's start. Where we are in this transition, you know that the key word for me is the transitions. We are in a transitory mode from a COVID world onto a post-COVID, but you will see in the coming slides that things are not obvious, I should say. This first chart is very interesting because it just pointing out that in UK, Israel, we have a kind of ramping up in terms of cases. In the United States, we are kind of plateau. And I mean, just a demonstration that the nasty Delta variant is just eating or is questioning all the process of reopening in the economies, including China. I would just point out some metrics, okay? The R0 is close to 6 with this variant. It's just the same that airborne viruses, meaning that we need 80% of collective immunity just to try to back to normal life. As you know, I think that's around the world, around in any country except in China, I should say, we have 20 to 30% of the population ready against any vaccine. Okay, and that's why I think that this variant could raise some questions about the optimism in the coming weeks. And the R0, it's a key metric to see if the reopening process is in danger or not. Where we are in transition in terms of global economic cycle, okay? Honestly, the two charts are summarizing where we are. The only metrics very important for markets is just the balance sheet of all central banks, okay? On all the central banks just ramping up in 2020, all the balance sheets. If you see on the second charts on the bottom of the slide, you see that there is a strong correlation between the S&P 500, for example, on the balance sheet of the Fed. But definitely the cash here also, national home price index has the same correlation. This is very the second chart is very important because definitely if you put this with this, you see that I think that at the end of the summer we could have some tension. I would say. In this economic cycle, we have a record low real rates. As you can see, it's -4%. Honestly, it's a record low, a 40 years record low. Okay, and we are record low also increased spread, meaning that market is pricing no risk at all, no risk. Of course, as I point out in my global macro insight, we start to see some interesting metric. For example, with the put call ratio, no risk at all, but the skew is really the steepening of the skew is huge, meaning that the cost to buy protection is higher and higher and higher, and it's a quite interesting metric. Okay, But at this stage, all green, no risk at all, everything is fine. Till the real rates is so low, is usually and obviously good for equities. Okay. Now where we are, one of the main concerns for me is regarding the debt. That's why I think that all the central banks are already trapped. The total debt, the amounts are just massive. Now we are, every matrix is above 10 trillions. Okay. If you're talking about the corporate debts, if you're talking about to the housing debt, if we're talking about the country debt, it's the metric are huge. And it's raising a question because the last Fed stress test, just the scenario just took into account a loss of $500 billion in impacting banks. And of course, the Fed say, oh, no problem, all the ratio should be good, even if the bank have to manage this kind of losses. But honestly, when you put some metrics like the total debt balance for housing, okay, for households, when you put the corporate debt, usually during a credit crisis, the each ratio, I should say, usually raised to 10%. Okay, 10% of 14 billion, for example, in the housing debt. Okay, for the household, or 11 billion. Sorry, it's just 1 trillion of losses. It's 2 times the level of the stress test selected by the Fed. That's why anyway, if we have any credit crash during the summer or in the coming years, honestly, all the stress tests are just too low, I should say, in terms of metric, in terms of risk. Now, one of the main metric to consider during the summer is the inflation. As I point out many times, the Chinese PPI is the global CPI. Okay, when we see the both curve, okay, PPI and global CPI, I think that it's just clear. Okay, when you see the correlation between the Chinese PPI and the US CPI. Okay. I think that it's very important to keep this in mind, that the inflation is there. Now the question is, inflation is transitory, yes or not? Okay, the Fed is pointing this every time that the inflation is transitory. I don't think so. This is not transitory, for plenty of things. First, the transport. Okay, the IMF just few days ago just published this kind of metric on the ocean freight. It just ramping up above. We are close to 2008 highs. Soaring prices in international food prices, the same. Most scary, I think, I should say, it's of course regarding the food price, is all the climate change, all the demography. It's just also some metrics. These two metrics are not transitory. That's why the increase of food price will be transitory. Okay, it's the same, for example, also in some raw materials, mainly dedicated to batteries. Okay. Because in transition period, we have, of course, from the pre-COVID to post-COVID, but also we have some other transition in the same times, mainly the ecological transition. And of course, batteries are in the center of the game. Following according to BMI, okay, in 2020, 65 billion, okay, was spent on the production of batteries. Okay, again, 6 billion only for the mining. And at this stage, I want to just point out that the ESG, okay, cool is here for last, okay, and definitely it's inflationary, because when I'm seeing some activists just arriving to the board of Exxon, for example, we will have on also some activists just forcing BlackRock to get out the funding of miners on oil explorer. Of course, we have kind of dichotomy between the demand on the supply. As you can see, the lithium supply, I think, is widely imbalanced, and of course to extract new life to build to expand the mining in lithium, the time frame is wider than market is expecting. Is between 3 to 5 years for the lithium in terms of mining. For semiconductors, is the same thing. It's between 3 to 4 years between the first stone to build a factory and 3 years or to 4 years after the factory, even if it's a gigafactory, is fully efficient on reach the full production. Of course, it's the same. You have some very nasty imbalance. Mainly, Guangdong region in China where is the Shenzhen area roughly. This is the main port in the world in terms of containers and so on. As you can see in the red curve on the top charts, the activity just crashed due to the Delta variant. As you can see on the left, on the right part, sorry, the container is just smashing down in terms of volume, and of course the price is ramping up. It's the same thing. Is the same also in the wage growth in states. As I mentioned, the PPI in China is roughly the CPI in states, but of course more and more due to the Trump administration and now Biden administrations, they want to rebuild the kind of industry in states. And of course, now the wage growth for lower earnings in America is ramping up. I would like to point out a very deep and very interesting study published by the Fed of Dallas. As you know, Amazon has issued to catch the right employees, and the needs is massive. Now we will see in this Friday how the economy is managing this imbalance between the demand and the supply in terms of workers. Amazon decided to increase the minimum hourly wage to $15 per hour. Generally, it was between $7 to $10 per hour. For the lowest wages jobs. In the Texas, the Texas will withdraw all the federal COVID-19 employment assistance. Roughly, it was last week. On Friday, this fund just withdraw a huge income. $2.9 billion per month. But the most important, the Fed of Dallas just compute what would be the wage per hour to replace benefits. They calculate the figure, and the figure is $17.33 per hour. It's far away above 15, but it's massively far away above $10 per hour. This is explaining why the inflation will not be transitory at all. And is why we have this imbalance between the demand and the supply in jobs. And some states who cut all the state's aids, we are seeing some a quicker narrowing gap between the supply and demand in jobs. But anyway, we will see the figures in February. But trust me, this figure is just massive, because now we know that due to the supports, okay, sent by the Fed and by the states, okay, uh, now it's a $17 per hour. It's massively inflationary pressure in anyone. Now, of course, who will be able to pass through inflation on I want to talk about the share buybacks, because of course the TINA effect, there is no alternative, the FOMO effect, fears of missing out, push plenty of investors into equities. Fine. And as I mentioned previously, till the real rates are so low, this is pretty constructive for equities. For credits, okay, the same, but honestly, we are not paid for the risk. We are not rewarded for the risk. Now, it's interesting to see that strangely, I should say, strangely, no, close to 50%, okay, in services will not be able to pass through cost increase, okay. It's not the same in manufacturing. That's why I think it's also a demonstration, okay, that if the states are it's massively at 70% services economy. I think that it's quite scary for the inflation. Inflation is not transitory. In terms of share buyback is important in terms of flows, okay? Because definitely we will, the company just now announced a huge share buyback. You see the metric is 584 billion US dollar, far away. It's a record high, okay, in the history. And now we will see if the inflationary pressure on the margins in some company will not generate some announcement that they could reduce their share buybacks. That's why I put these two charts together, because in the coming months, we will have to this kind of balance, okay, in the communication. On the Q2, the earnings Q2 period of announcements will start in the coming days. I think that it will be important to see what the CEO will announce in terms of pass-through, in terms of cost, okay, to the clients, on of course their decision about their share buybacks. Where we are in terms of transition, okay, the tax regime is changing. As you know now, the US succeed in terms to impose a global minimum income tax per country on multinationals. GAFA will be the most impacted. The anti-monopoly regulation, antitrust regulation is ramping up everywhere, and the new nomination in the people named to running the FTC quite, I should say, nervous again any big GAFA or any big techs. The Chinese GDP release in Q1 just showed the impact of the base effect evaporation, and I think the Q2 figures will be very key during this summer. Inflationary pressure are there, as I highlighted previously. The PPI in China is the CPI of the world, and we will see in the coming days what will be the CPI in states in July and August, and will be key metrics. It's still vague about the international travel for vaccinated people. I am vaccinated, but it's still complicated to go to the States or in other countries, okay? What will happen with the Delta variant? It will be the crucial point, okay? On what is going on in Israel or in UK is not good at all. On mid-August, for me, we should have the full cancellation of any state aids around the world, okay? On the Jackson Hole will be the tipping point regarding all the policy makers, regarding their accommodative policies on. And we will see what we're going on in inflation, what's going on in consumptions. I know that deposit is massive, but honestly, people will think twice about to spend because, as I mentioned here, okay, $17.33 per hour should be the minimum threshold to replace benefit, excluding transportation, childcare costs associated with a return to work. The return to work has a cost. The transition has a cost. And when you withdraw all the support generated by all the accommodative company policy from states, but we will see from central banks, credits on consumptions could be in troubles. Okay, and that's why we have to bear this in mind on now the state of the market. Okay, I keep the cartoons that I showed you last time. I think it's quite relevant about the current market. Okay, we know the situations, but okay, let's dancing. And now the charts on the bottom of the page is just demonstrating that we are in the extension mode due to the central bank policies. But you know the end of the story at one stage. Okay, all the inflationary will bite very heavily on the central bank. We need to withdraw. I'm not talking about rate hike, but just to withdraw their QE. Okay, when you see these charts, okay, the extension of the extension of the balance sheet is the extension of the S&P 500. If you cut the extension of the balance sheet, you know the rest of the story. Okay, and on this is why I think that we need to stay barbell. Okay, the inflation is there. We have to position our allocation in the GTO. Okay, is our global macro strategy is already positioning for an inflation shock. Okay, we are still short of the 10 years and 30 years. We are long break evens. We are still bullish to bullish dollar, definitely. On inequities, we turn more positive because honestly the extension will continue during the summer till the communication will not change. I think that after mid of August, around the Jackson Hole, we could have some perturbation. Okay, inequities, we are in favor of US on Chinese stocks because definitely if inflation is ramping up, China is well placed because they're producing for everyone. On US, because I think that the elasticity of the economy is definitely the biggest advantage for the US. Of course, we are in the danger zone. You will see the price of the houses, the leverage in the economy. Definitely, the debt level is just too massive. On any debt crisis, will wipe out all banks because definitely, when I saw the matrix just selected by the Fed for the stress test is too low. 500 billion is nothing. Okay, we have roughly more than I think 230 billion dollars of debt. 1%, 10% of collapse. It's 23 trillion. Okay, 500 billion is nothing. And now I will just point out just I use the few minutes just to talk about China. We know all I'm very bullish in Chinese stocks, and I will explain you why. You know that we launched several thematics. The last one was the China decarbonization 2060. We started with 30 million. The start is pretty good. Honestly, the performances in pro forma regarding all the strategies that we will show you briefly are just amazing, far away above the Chinese indices. You have to bear in mind, even if you are listening the US rhetoric about ban to buy some of Chinese stocks, okay? Honestly, I never saw this kind of flow in Chinese equities. Okay, Now they are up 70% year on year. Only the northbound, meaning the flows coming in A shares, okay, are up 95%, okay. At this stage, we are reaching $33 billion, okay, of flows. Usually the average is 40 billion, meaning that we will be far above this limit. First, flows are massive. Also, the announcements are massive. Okay, BlackRock is get a license in China. Goldman Sachs, Blackstone. Anyway, okay. After the foreign participations, okay, in Asia is massive too, which a recall of 4.5%. I should say only. Okay, it was 1.5% in November 2014. Okay, it's far away higher, but honestly, the foreign participation is still peanuts. And the most interesting stuff, why Get Advisory, okay, is very bull on Chinese thematic, is just because following BlackRock, okay, during the year 2020, the allocation, okay, to China did not exceed 0.3% for equities and 0.05% for bonds. Okay, guys, we are talking about one of the first countries in the world. We're talking about perhaps the biggest market caps in some sectors in the world. You have nothing at all. Okay, and that's why I think it's pretty interesting to see how to address the asset allocation in Chinese stocks. I want to really point out something very important. You have to keep this in mind. Gate Advisory is not a thematic boutique. Okay, it's a global macro group, and due to this global macro engine, I should say, or process, we determine that China is one with US is the main axis of investments. To address properly and to overperform indices, thematic are the best way, equity thematic are the best way to invest. That's why we produce so many thematic. And now you see the world of Get Advisory, okay? We are a global macro company, okay? We generate the global macro opportunities. The hedge funds macro only invested in ETFs, mainly it's daily liquid. You have global equities with global 5G is the sole with 40% of Chinese stocks. The global space edge, also the sole with Chinese company inside. On the global China thematic. The global China thematic is the equiponderation of all the thematic that you are seeing in Chinese equities, okay? And it's just demonstration of our macro perception, on the macro vision that we have in the investments, okay? Investors need to be invested in China, point. After it's on a very bullish asset allocator now has 1 to 3% of China only. If you compute what you have in US equities, you have perhaps 25%, okay? I'm not against that, okay? I'm very bullish in US equities, definitely over a long period of time. But honestly, it's maxed 1% in equity, Chinese equity. Come on. That's why I think that this kind of scales in terms of thematic, I think is quite interesting to assess what is China. Now, very briefly, we issue this kind of map, okay, just to organize how we could invest on our proposition, okay? Not all are issued, but everything is tried, built. Now with Exxon, we will have all this quoted soon, and that's why I'm very proud of that. On China decarbonization is the first one with 30 million now. On all the other, we come soon, I'm sure. It is a pro forma performances of the equiponderation of all thematics in the global China thematic. The performance year to date is plus 20%. Point. All our thematic are absolute return, meaning that we are able to cover all this with our macro process. Of course, I am at your disposal for any. I have 70 pages report about these thematics and so on. Okay, just briefly, the decarbonizations, as usual, is the same constructions, equiponderation of all lines inside the thematic. On inside any thematic, we try to catch the sub themes. In the decarbonization, it's no way a pure energy transition stuff. It's no way a clean tech thematic, because decarbonization is not that. It's not only that. Okay. In industrial energy efficiency, carbon capture, recycling, hydrogen, battery are the main pillars of this thematic. For the aging society in China, it's the well-known, I should say, pillars, okay? The well-being, financial saving, dependency, leisure, transport, and so on and so on. With that, we calibrate our sectors, weightings, and so on, and after we move on the stock selection. For the China millennials, also the same. China millennials are huge, 400 millions, okay? Chinese are millennials, okay, compared to 80 million in the United States. It's just an example, okay? And we have plenty of metrics like that, okay? I don't want to bother you with some stuff. We have write a very deep research about that. I think it's interesting to understand, because to build the thematic is up us to understand in terms of macro what's going on in China, on the scale of what's happening in China is building the trend of the future for the global economy. Smart city and digitalizations, okay? It's smart city, just massive. 800 city could be in the coming years considered as smart city. Now we are talking about super smart city in China. 30 cities could be named like super smart cities, okay? After, for the digitalization, we have the subsector, smart engine, smartphone, cloud computing, e-commerce, financial services, social media, and games. And of course, this helps us to design the sub-teams to drag down in the thematic. This is a map, okay? And I think that it's quite unique. We are the only one to propose this kind of map, okay? Just to the real approach, because you have to understand that the flows on all the moves of Chinese stocks are not dictated by the fundamentals. They are mainly dictated by the flows coming from the retail army in China, because definitely this is not new in China. It's new in States, but it's not new in China. Honestly, the fundamentals just are waiting for 20% of the flows. In China, you need to understand why you are to invest in China. After, you have to dig in details in what kind of thematic or drains and to gain some flows, okay? And after, you have to see if the politics will be in favor of that. And after, we down to some metrics, of course, in some stocks, but you need to bear in mind that is more relevant to address through a global macro top-down process than the opposite, okay? And that's why we promote this kind of approach. And honestly, when we are seeing the performances, it's just massive, and I think we are in the right way. I finish with that. I don't know if we have some Q&A. Feel free to ask some questions. We are here for that, and it will be a pleasure to answer.
Yeah, one question, Jacques, maybe first. On the first part of your webinar, you were talking about inflation a lot, and definitely it's a key topic for now. And your position is very clear. But let's assume for a minute that there won't be that much inflation in the coming months. Let's just take this as a case study. In that case, what would be your main scenario for this summer if there is inflation?
Yes, it's a good question. It's the consensus, okay, is clearly in favor of a transitory inflation. Okay, my stance is that it will not be transitory, and the regime of the inflation will be higher than expected for everyone. If we have not inflation, okay, is meaning that the consumptions on the production in China will dry down by new variant, by something else, okay, or perhaps by the lack of consumptions in Occident. Or I think this is why I point out the variant, the Delta variant in my first pages in presentation, okay, because if we have this kind of perturbation in the consumptions, and the consumption is not there, in this case, the inflations will not be there. Okay. After, the other way to see a disappointing inflation, I should say, okay, will be that the supply of raw materials will be big enough to compensate, okay, the ramping up of the demand. But in this case, I'm not seeing that because the shortage is just massive. You see the lithium. I have the same chart for the cobalt. It's just massive. On the ecological transitions need to impose the huge needs of batteries, for example, and solar panel and so on, or the disruption in the supply chain is so massive. After, why the inflation will not be there? Of course, the Uberization, the robotization is there, definitely. Of course, we are talking about deflationary forces. But on plenty of people just raise the point to me that the demography, aging population also, is a deflationary, but not in this case. Honestly, in China, I pointed out this during my previous webinar. The move in the Chinese population is massive from the countryside to the city. Even if you have aging populations, you have more and more numerous people in cities, okay? And in the cities, you have more and more people needed in the services, meaning that this kind of two-scale journey in the transition, the population transition in China is massively inflationary. If we have not, to back to your question, if we haven't any inflation, okay, it will be the demonstration that we have a huge issue in terms of demand, definitely, meaning that the Delta variant could be the cause to the loss in terms of momentum for reopening process in our economy. I think it will be nasty for the overall market, because of course the temptation for the central banks to withdraw their support in the bond market will be postponed. Fine, okay, could be interesting for the bonds market, perhaps mainly for govies. But for the equities, the expectation of the earning growth are so massive that it could be a huge issue for the equity market.
I see. Very good. Thank you. And with inflation, we've seen a lot of volatility also for some assets, typically gold and the cryptos. And we start seeing more and more cryptos in the portfolios. What do you expect here? It's like we are at a crossing. It could be much higher, it could be much lower. The prices tend to stabilize a bit. What would you expect here in the coming months? Well,
definitely, it's a good point. Okay, I was clear in my writings about that, but I will be again clearer. I hope so. Unclear. It just blockchain for me is not double core. Okay, it will be a massive game changer in terms of technology. in the coming years. I am also a strong believer in CBDC, meaning central bank digital currency. I'm sure that we will see in the coming years central bank digital currency for plenty of reasons. Now, what's happening in regarding the cryptos? I think that the Bitcoin, okay, cooled down to $22,000 for plenty of reasons. Mainly now, the USA, China it's just cracking down all the miners. Okay, US, the Treasury in US are more and more is more and more voicing regarding the money laundering through cryptos. This weekend, the FCA just communicate regarding to host Binance, the biggest crypto exchange from UK, if you don't comply to their requirements. What I'm thinking that I think that I would prefer to go to gold due to it's quite logical regarding my scenario in terms of inflation. Okay, but at this stage, gold is a buy. Okay, I don't think so that it's the Bitcoin is a buy at this level. For as I mentioned to the US, I mentioned to the UK, I mentioned to China. And I think that it's the value of this kind of assets. It's quite intangible, I should say. I think that the regulation will just the pressure of the regulation will be massive in the coming weeks because states need to get money. Now they spend a lot of money to try to keep safe people and keep safe economies. But now they want to get back some money. That's why taxes should increase. And the central bank digital currency will be the best tool to stop and try to stop money laundering on fiscal gains. Okay. I don't know. Your micro.
Sorry, I was saying final word, but not the easiest one. You were describing a lot of the investment thematics you are launching, which are great, and it was very helpful. Thank you. If you had to keep one for summer, I know it's a tough question, but if you had to keep one for the coming months, what
Yes.
would you?
One. I think that I will answer like a normal, and we say I choose two. The first, the one inequity, I will be in favor of the global China thematic. I think that's with China decarbonization, I should say, is the best one. It's a no-brainer call. Plenty of honestly, I discussed with plenty of very big asset managers. Okay, on. We are very lucky in Get Advisory because our clients are sometimes managing hundreds of billions. Okay, they cannot sell China decarbonization except with Gate Advisory. That's why China decarbonization is very our tipping choice. Okay, with the global China thematic, it's interesting because we have a ramp. We have everything inside, and after the other things is the global tactical opportunities, because honestly, we did well last year on this kind of ancient macro strategy. Is very far away interesting. Okay, that's why China Decarbo it will be my best choice in the current environment due to asset allocation, transition, ecological transitions. On also to put the money in the right area.
Okay, very clear. But thanks a lot, Jacques. I think we are almost on time, so it's perfect.
Thanks to Quantilia to hosting this webinar as usual. Okay, thanks for cooperations. Hey guys, okay, have a safe summer. Stay safe because the nasty Delta variant is there on. Okay, we will see the rest of the summer. And be bubble, and we are here to more and more. Now we have 65 million under asset of advisory, and we are very proud of that in such a short period of time. And the goal is to, of course, sky is the limit. And now we have plenty of ideas on construction that you will not find in other company. Okay.
Very clear. Thank you, Jacques. Thanks a lot, everybody. Thanks for attending, and I hope to see you again soon for our next webinar.
Okay. Bye bye.
Bye bye. Thank you.